About system of adapts.
All right, we're going live.
You there? Yeah.
One more second, we'll be live, guys.
We got a echo somewhere.
Everybody mute. We're live.
Teach, it's you. You're the echo. Okay, can you hear me now? All right, guys. What we're doing today is we're diving into the insurance world. We're always discussing real estate. We're talking investment properties, but a lot of people don't understand what goes on the insurance side. And often we'll put in an offer for a property only to find out 2-3 weeks later after we spent money that it's not insurable. So let's dive into some questions here. I want to welcome our team as well as some of our guests. We've got Keith Gillen on the phone. That's an insurance agent with Pfister Insurance. I've got Dave Bransky from AAA Insurance, and I've also got Jim Kalick with that wonderful beard from State Farm Insurance. So guys, I want to just kind of start off and just ask you, is there a difference between personal homeowners insurance and buying an investment property? And what are the major differences? So let's start off with that beautiful beard and Jim Kalick. Go ahead and answer that question for me.
Thank you, Blaze. Yes, there is. So a personal insurance policy is going to be a policy like a homeowner's policy where you live in the home that you own. So if you own a property that you do not reside in, you do need to get a different type of insurance policy. So that is one common misconception we see with family that might buy a home that they let their kids live in or something like that. And they don't understand that they do still need to get a different type of policy to make sure they have the right coverage.
Okay, I appreciate that. So Keith Gillen, let me ask you this one does it affect on a commercial policy on a multifamily? Is there a difference between a 2 to 4 family like there is in residential world? If we go 1 to 4, it's considered residential. Beyond 4, it's considered commercial. Does that same rule apply in your world in the insurance?
Yes, same thing. Any of those 1 to 4 family options or units can be written on a dwelling fire type policy, which is more of a personal lines type policy, whereas anything 5 or above would have to be on a commercial policy. So those are really the only changes, from that perspective. The only thing that I would say, and you might get into this too, is sometimes options are a little bit more limited when it's a standalone property or versus an investment property where you may have your auto and home with a carrier, and then you can write a residential dwelling fire with it. So again, you might get into that here in a little bit.
Okay, same question. Another question just to add on to that one. How does zoning affect it, Keith?
You said zoning?
Zoning. When a property is zoned commercial, R1, R2, whatever it may be, does that have an impact on how you have to have the insurance coverages for those areas?
No. If it's a commercial property with 5 units or more, that'll be on a commercial policy as opposed to 2 to 4, 1 to 4, what have you. I think we've had a situation in the past. The only type of zoning that could have an impact could be flood zone. So that could have an impact in that way from an insurability perspective.
Well, I guess what I'm getting at there is like, if I have a property that's zoned single family residence, but somebody along the way converted it to a 3 unit, is there an insurability issue for you because it's a 3 unit, or does it just have to fall into certain criteria and zoning doesn't matter?
Yeah, the zoning wouldn't matter there. The only thing that could matter from a carrier perspective is some carriers don't like the fact that it was originally a single family and it was converted. So it really just depends on the carrier. I have a carrier that doesn't like when they've been modified to that effect.
Yeah, what I've seen is getting rebuild letters from the insurance agent that it couldn't be rebuilt as a 3 family because it's not zoned that way.
Okay, so Dave Bransky, here is a question for you. Give me some major items that you encounter on a day-to-day basis that would cause a property to not be insurable?
Well, the biggest thing that we run into in the insurance market, wiring in or electrical updates, people that have knob and tube wiring, aluminum wiring, circuit breaker boxes. Uh, Basically, insurance companies want risks that were everything was redone within the last, well, certainly 30 years, ideally, but they want copper wiring. It's wiring and plumbing. Those are the two biggest obstacles there. Also, the carriers love to see new roofs. So, the newer the roof on the property, the better the rate typically a client will see. But wiring
Okay.
is probably the number one obstacle. Knob and tube wiring, if it can be eliminated before the close, they probably should do that.
Okay, and from an insurance perspective, what are you guys doing to inspect that prior to a close? Or is there an inspection prior to close? Anybody?
It's
We
mostly on the honor system. If a client reports to us that there is knob and tube there, we have the obligation to disclose to the carrier that there is knob and tube wiring. Some of them will look past a little bit of it if there's a brand new circuit breaker box in there and all that is up to code. But in general, except some excess surplus carriers, none of them want to have any of the knob and tube.
Okay.
Well,
So same question to you, Jim. Is there any other things that he didn't mention that would prohibit somebody from being able to insure a property that maybe he didn't mention?
So we are going to come out and get outside photos of the home when it's an investment type property. We don't have to go inside, but if it's an older home, we're going to take a picture of the service entrance, so where the electric enters the home. So we're definitely going to have to see, even if it's honor system for the inside, we're definitely going to have to see that has been updated to some extent over the last, at least since 1960. And then, so we had a customer where, I asked him, hey, is the home anything that we need to know about it? Any damage in the house? No, of course not. Come out there and we have an entire side of the home that isn't sided and has just like plywood exposed. That is an issue. He did have to get that fixed. So State Farm was pretty nice. They gave him time to address it, but we had to get new photos and get those submitted. So the inside going to be honor system, but we are going to get some outside photos of the house.
Okay, awesome. So
is
Keith,
there any
I know-
time that you guys would ask for the home inspection report?
I'll ask for that to help the customer. It's not anything that's required, but sometimes the customer doesn't know the answers to a lot of the questions. They're struggling. I'm happy to take that home inspection and just, go through that myself to try to make it easier for them.
Keith,
I
let me
think it
ask
does.
this question. I was going to ask you, Keith, because you do a lot of larger commercial stuff. Are there additional things that you look for on the commercial side? Accessibility issues, things like that for wheelchairs or anything like that you encounter?
Yeah, I think those are good things to have, and also information as far as, I guess you could say, protections as well. So in a commercial property, is there central station alarm system, burglar system? Is there sprinklers? Is there an elevator? Is it maintained and regular checks? Do you have a maintenance staff on site? Also, kind of going back to a couple other things that the guys had mentioned from a plumbing perspective, and David, you might have hit on this, and I'm sorry if I'm repeating, but galvanized piping or cast iron is a challenge. And depending upon the age of the property, the home inspection could be required. Again, it depends on our carriers. Jim's carrier at State Farm might have different requirements than David and some of my carriers. So each carrier is a little bit different from a requirement perspective. But I will also add one more thing too. And most investors are probably out of state looking to you folks. But property management and local capabilities to correct things quickly are going to be pretty required in my carriers. So kind of all of those things are tips tips of the iceberg, so to speak.
Interesting. So as an out-of-state investor, you're saying that some of your carriers are actually requiring them to have property managers? Is that what I heard you say?
Yeah, because I think the bottom line is they don't want it to be an absentee landlord situation. I've got a property in California. If something goes wrong, I don't know any way to kind of help with correcting the issue. So property management is going to be very important, as far as my carriers are concerned.
Awesome. They say you learn something new every day, and that is one of those insurance things that I honestly didn't know that it was a requirement of a property manager. So if there's any investors watching the call or anything, that's critical information for them. Let me ask you this question. What is the major differences between being an investor and having insurance on your property, but then also having a tenant have their own renters and coverage, or does the owner's policy cover them if they're a renter?
Very good question. So the rental dwelling policy for the investment property, that has no coverage for the tenant. So the tenant really should have a renter's insurance policy. They're extremely affordable, but there's two big things they want to have covered. One is going to be their contents, their stuff, right? If they have a fire, they don't want to have a GoFundMe to replace their couch, their clothes, their pots, pans, all the stuff that they have inside the house, but then also liability. So if that tenant, like we had a customer who moved into an apartment complex and he set a box on the stove when he was moving in, and he actually caused a fire, destroyed the unit before he successfully moved in. He was liable for those damages. Thankfully, he had set up his renter's policy, so the repairs were covered. But you can be liable for things like that, or if they have a party, somebody gets injured, they get sued. They're going to want to make sure they have renter's insurance.
Okay, awesome. So, you guys on our team, of course, it's one thing to get somebody set up for their insurance to own the property, but you also want to be that resource that they could call you and say, hey, who would you recommend for tenant insurance? And we've got 3 experts on the phone. So please make sure that you're writing their information down if you could. Somebody has some background noise, so make sure you're hitting mute if you could. Anyway, who that would be.
And then coming back, you would leave at 8:13.
Okay, anyway, let's look at what is true replacement cost of the property and kind of how does that play into things here. Dave, why don't you answer that question?
Dave's muted. You're muted at the moment, Dave. Unmute yourself.
Okay, sorry about that, guy. Please repeat the question, Blaze.
As far as like true replacement costs, if people have, they're looking at their insurance coverages on their property, some people will have a certain amount covered, but then some people have true replacement costs. How does that, explain that to me as a novice.
Okay, so actual cash value is what the house is worth if you were to go out on the market and just buy a house. As insurance agents, a lot of times we hear people complain, why is the replacement cost on my house $350,000 where I could buy one on the street all day long for $150,000? The difference is with today's materials, today's labor costs, for everything, it costs that much more today than what it did, and it's higher than the market value. So the replacement cost is what it will cost to build a brand new home today. You can't put a used roof on an old house. It has to be brand new. So you're getting today's costs in doing it. The replacement cost values, I'm sorry. Yeah, the replacement cost values have gone up with lumber being up and, labor being up. So please repeat the specific point you wanted, Blaze. I lost my train of thought. I apologize.
I'm just looking ultimately at, replacement costs versus.
Okay, yes. So as the landlord or the property owner, if you insure it to actual cash value, you're not going to get the replacement cost of it. You're only going to get the market value. So it's more of a strategy for the people that are renting the homes. If they have 10 houses, do they want to pay the additional insurance on each one of them to have the replacement cost versus, I'm sorry, there's a lot of noise going here in the background, and that's where I'm getting lost in this.
Why don't
Let
we do
me-
this? Why don't we do this, Dave? Let's push pause on you. I'll push mute for you, but
Thanks.
Keith,
I'm just gonna,
follow up. Keith, could you follow up on that question of replacement cost? You're on mute too. Let's see here. Ask to unmute.
Keith, you're muted. Unmute your phone.
This is the hard part when we were trying to pinpoint who had the background noise. We now know that it's Dave. So Dave, we got to get you to someplace quiet. But I know
I
Jim,
am someplace quiet now. I apologize for that. I couldn't even think it was so loud here. So I apologize for bringing that noise into this conversation.
So Jim, let's ask you this question here. When you're dealing with a business coverage, somebody that owns a multifamily, maybe a 8-plex, a 12-plex, do they need business income coverage? And if they do, how does that help them? Kind of explain the business income coverage perspective.
I would definitely say that's something I would want to have if I was a landlord and had a large property like that. That's going to cover them. Let's say they have a fire, they can't rent their units, they don't have that income coming in anymore while the property is being rebuilt. That's going to help replace that income for them. So to cover those dollars that have been coming in, that can apply to apartment type policies. It can also apply on single family investment properties. It would be to both, to help keep them afloat while they're in that in-between stage to getting their property back up and running.
Okay, so building burns down, something like that, they're actually still having some type of insurance coverage that's giving them income while the property is being rebuilt. So it's kind of a twofold insurance where the building is covered and being rebuilt, but you're not losing that income in the meantime, because I'm sure that devastates a lot of investors if they don't have that extra in coverage.
Exactly.
What percent, I don't know, kind of explain to me, I can't ask you for an exact dollar amount or anything like that, but how much more is a policy like that, if you can somehow explain that in layman's terms?
How much more does the policy cost to have that coverage? Was that your question, Blaze?
Yeah, exactly.
That's just going to be, we're not going to have the option to remove that coverage on our policies. That's something that's going to be built into all of our programs. So it's going to be incorporated into the pricing right up front. And yeah, we couldn't remove it if we wanted to. So they're going to have it.
Okay, good.
Okay, so that's not a choice. That's great. Frank, did you have something? I'm sorry, maybe that was Keith. Keith, go ahead.
Yeah, if you don't, do you mind? So to Jim's point, I'm sure you're talking about on a rental dwelling or a dwelling fire type policy, and maybe State Farm includes it on commercial policies as well. But that would be an elective on a commercial policy where you can add business income or loss of rents. And that would be an add-on for my carrier's policies. Again, cost is very reasonable. It's really dictated by the amount of loss of rents or the amount of business income. But again, very reasonable that you would want to have that in there.
Okay, and then from a coverage perspective, is there a certain portion of rents that's covered on those, or that just ranges across the board from carrier to carrier?
It depends on the carrier and what they are willing and able to write, but additional or actual loss sustained is usually what you write it on with regards to a commercial policy. And you're really going to price that based on what you're getting. If you have 20 units and you're getting $1,000 a month, calculate that out. And that's what you want to use that for your basis as far as the premiums are concerned.
Okay, awesome. Let me open the floor to any of the agents that are on the call. Does anybody here have any specific insurance questions that they want to ask, maybe they've encountered recently? If so, raise your hand. And
You know, does it make a difference if the investor is a new investor, they've not owned investment properties?
Not for us.
So same rates, same coverage.
Mhm.
okay,
It could. it depending upon the type of property, a commercial account, they'll ask for experience, and it could have a play in the actual risk itself. But for the most part, companies are going to be okay with it if everything else checks out.
Okay.
And I should backtrack. Keith is right. If it's an apartment type policy with us, there can be discounts associated with length of time if they've had coverage in the past. That can have a positive impact if they have some tenure.
How do you guys analyze the property manager? So say they hire a separate company for property management. Is there any requirements there?
Not from
They
us.
they have a hammer and a cell phone. I think it's more just being able to.
A hammer and a cell phone. Okay, so any other questions from any other agents? Throw hands up if you got something. All right, so I'm going to ask the last question to each of you. Is there anything that we didn't cover in here that we should, a question that we should be asking? And if so, what is the answer about further covering your property? We'll start with you, Jim.
So one thing that comes up a lot with my investors that have many properties, or at least like 3 or more, what you start to see them doing is creating separate. Now, I'm not an attorney, so you want to consult an attorney before you start making decisions like this. But yeah, asterisk. But what they're going to do is a lot of times they're going to start creating separate LLCs to try to create, sometimes for tax purposes, but to try to distance themselves from a liability perspective. And I've even seen folks where they might have 10 properties, they have multiple LLCs set up for those properties, and then they manage them, but still create another LLC even for the management company to create even more distance. So again, they have an attorney that helps them with all those things, but it is something that we're able to very easily do for the customer and set up, multiple policies.
Keith, anything else you would throw out there from additional coverage?
I think that was a great point by Jim. And there are some people that will put investment properties in their personal name, and any way you can insulate yourself and not have anything personal out there for that is tremendously important. I did note when I was kind of writing down some things, even the heating situations, especially on the commercial side, a lot of them will be boilers. On the commercial side, you'll have flat roofs, and those are exposures that companies are very apprehensive about. So those are probably 2 other things on the commercial side that you want to make sure you're kind of prepping and assessing, when you're getting ready to put a bid in and or potentially purchase it from an insurability standpoint. Okay,
so boilers and flat roofs you would add to that, you said.
Yeah, it kind of just, again, comes back to age. Boilers are, you rarely see a new boiler. It's probably 50 to 100 years
They're
old.
like dinosaurs.
So, unless Kevin Swan is in there doing it, our plumbing friend. But otherwise, yeah, just kind of making sure you address those things up front.
Yeah, if you want to increase square footage on a building and you have a boiler system, that's the first thing you can do if you got one of those old dinosaurs. I mean, they're 10 by 10, some of them. And when you get a new system, it's shrunk down to barely nothing. So David, is there anything else that you would throw in there for additional coverages or something somebody missed?
Yes, well, a couple things. So back to replacement cost value versus actual cost value. If there is a loss, say there's a fire in the kitchen and you have it insured at 50% of what the replacement cost is, the carrier is only going to pay half of the amount that was lost in there because you have a co-insurance. So it's really a strategy that the investors need to have ahead of time. How much are they willing to sustain? How capable are they of fixing a loss? If it's a building contractor that's renting out multiple properties, I have one that had 20 different properties and he would handle any losses. Also having a very high deductible. He knew he was never going to make a claim unless it was probably a major fire loss. So he would keep that deductible as high as possible to keep the rate down. And then lastly, when you had talked about experience, landlords that do credit checks, that helps them get a favorable rate. Being a member of a landlord association, there seems to be credits involved by doing that. So the longer they're in the game and they know some of the different things that active landlords do, different ways to get better rates in there. Experience does seem to offer some credits in getting a better rate with the carrier.
Okay. When you're, Keith, I'll ask you this question. When you're insuring a commercial property versus your own residential, I know on the residential side, credit, your own personal credit has a big impact on this. Does it also do that on the commercial side as well?
Not normally. Again, it could depend on the carrier. Some carriers may have that component in their rating structure, but for the most part, experience and kind of prepping from a tax ID number versus social security number, those types of things will have a bigger impact. But yeah, on the commercial side, I don't see it with my carriers with that having as much of an impact.
Awesome. All right, guys, I truly appreciate you jumping on here. I'm trying to keep this down to about a half hour for our live feed. I appreciate you jumping on here. I know none of you knew you were going live today, but you did awesome. Maybe we'll have you back on here in the future. But again, if before you leave, make sure you throw your information into the chat so that our agents that are on the call can grab that and have you guys as valuable resources to use when they're talking to their clients.
Thanks, guys. Appreciate it.
Thanks.
Thank you, guys.
Thanks, everyone.
Thank you, guys.